Welcome back. In a slow growth world, more governments are trying to intervene and boost their economies, something that's good in theory, but not always in practice. Here's what you need to know. First, growth is definitely slow. The IMF is calling for global growth of 3.2% for the next 2 years. For advanced economies, growth is 1.7% this year and 1.8% next. For Canada, the outlook for this year is just 1.2%, rising to 2.3% by 2025. But Canada's problem isn't just top-line growth. Chronically weak productivity is turning into a lower standard of living. Productivity eked out a small gain at the end of last year, up 0.4% in fourth quarter, but that was the first positive read since the beginning of 2022. And even then, Canada's productivity was lagging badly, just 71% of the United States level. That compares to 88% of the value per hour of that economy back in 1984. Lower value per hour produces lower wealth per person. By 2022, Canada's economy was valued at $55,522 a person. In the U.S., that number was $76,329. Governments can try to improve growth and productivity, and they are trying. The IMF says there were more than 2,500 industrial policy interventions globally last year. 2/3 of them are distorting trade by discriminating against foreign businesses. One way to boost growth is to focus on research and grants for startups, as well as investment in technology across all firms. The IMF estimates that by increasing spending in these areas by 0.5 percentage point of GDP, or by another 50% of spending in most advanced countries, you get a boost to GDP of 2%. Clearly, governments everywhere are trying to take some action to boost productivity. Many, though, seem to be missing the mark. Daniel Garcia-Macia is an economist with the International Monetary Fund. Thanks for being with us.
Thank you, Amanda. It's a pleasure to be here.
So the answer to the question of what to do is right in your own research. It's spend more on research, on investment, on encouraging businesses to invest in themselves. Why do you think it is that governments instead choose tools that end up distorting their economies rather than that direct investment?
So that's right. The first message of our Fiscal Monitor chapter on innovation is that industrial policies should not be seen as a magic cure for slow growth. We see many countries ramping up industrial policy for different reasons, including for security concerns. But one common feature of these initiatives is that they try to support innovation in specific sectors, like green technologies or advanced technologies. So what we do in our report is to develop a new framework to analyze the economic costs and benefits of industrial policy for innovation. We show that using industrial policy can deliver economic returns if subsidies are directed to sectors that generate higher knowledge spillovers to other sectors in the economy or have other social benefits like lowering carbon emissions. However, there is an important caveat, which is that since these policies rely on costly subsidies, the potential gains can quickly turn into losses if these subsidies are misdirected.
So, I mean, interesting that there have been so many, a rising number of policy interventions, we might say. Governments are getting more activist in their own economies. Big picture, given that they tend to get it wrong, is that a good or a bad thing? Should we say it would actually be better if they would do less because they tend to do policies that are harmful?
So I think it's a very important question. How can governments do better than what they're doing? And our message in the Fiscal Monitor is that there should be, for advanced economies, a fiscal policy mix that supports innovation more broadly across sectors, but also with an emphasis on fundamental research that has been underfunded in recent years. So as you said, we find that certain policies are more cost-effective, and a complementary package of more public investment in fundamental research and development grants for innovative startups, and tax incentives to incentivize applied innovation across firms could actually deliver larger GDP impacts. We find that increasing spending on these policies by 0.5 percentage points of GDP for advanced economies could actually boost GDP by up to 2% in the long run. And what's more interesting in the current juncture of high debt is that these policies could also reduce the debt to GDP ratio over time. So in other words, spending on innovation, if the design is right, can actually pay for itself.
And we don't have a ton of time here, but do you think governments are beginning to get that message? We saw a hint of it here in this country in our most recent budget. Is it something you think we'll see more of?
Well, what we're seeing is a ramp up in industrial policies across the board. And as I mentioned, this has pros and cons. The key here is that governments that want to pursue industrial policy really invest in their administrative capacity to make sure that they select the right projects, that they recalibrate support as conditions change, and more generally, that they act in line with open and competitive markets,
right,
avoiding inward-looking policies.
Daniel, so good to have you for this. Appreciate your time.
Thank you.
Daniel Garcia-Macia is an economist with the International Monetary Fund. Well, there were measures in the federal budget aimed at boosting business investment, but will that be enough to move the dial? Dennis Darby is President and CEO of the Canadian Manufacturers and Exporters. Thanks for being with us. And let's start right there with your general impression of this budget. What do you make of it?
Well, I think there were some positive in the budget, and one of those is that they've expanded some of the tax credits that we've asked them to expand. But at the end of the day, they're still not coming quickly enough. And I'm not sure they've completely got their focus on increasing our productivity, which is a real problem.
So if we do want to increase productivity, Dennis, what's the best way to do it?
Well, that's a good question. But first of all, I think one of the things is we really have to make sure that those tax credits that they announced last year get implemented, because companies make decisions in real time, and those are tax credits to help improve productivity and lower greenhouse gas emissions, all the things we need so we get more output, per hour work. Number two, we have to make sure that we're investing in our trade infrastructure, because I think that is also an issue for Canada in terms of our trade infrastructure, our roads, our rails, and ports. And tax benefits or tax credits for training. One of the things we've asked for over and over. I know it will take time to get more people qualified to help, generate this, this improved productivity. For now, we need to have some incentives for companies to invest in retraining. So I think there are some things they could have focused on, aside from getting those tax credits rolled out.
There are already tens of billions of potential credits for things like green investment on the books that have yet to become law. Is one of the problems we have that we're too slow?
That's what I would tell you, and I told our members. We're great at ideas. The government has been very, very strong with lots of ideas of things to do. The problem is delivering. And I think where we fall behind our biggest competitor and our biggest trading partner, the U.S., is they get things. When they do something, it gets done and implemented with some haste. We've been pretty slow at getting these things in place, whether it's their capacity, whether it's our processes. But I tell you, from a business point of view, it's great to say we're going to do these things and make these things available. It's really important to say when, how much, and what are the conditions.
Overall, are businesses feeling pretty optimistic, or are we still feeling gloomy? And we haven't had a recession that we worried about. We are going to get some expansion, although it might be modest. Are we feeling good?
I think the industry is cautious right now. Everyone looks south to see how the U.S. will continue. Obviously, their election may or may not have an effect. In the past, it hasn't had a huge effect on their economic output. But I think businesses are looking to see their biggest trading partner, how they're doing. Here, order books are softer than I would like them to be. And I think some of the announcements in the budget, like the capital gains tax, is something that just really deflates especially entrepreneurs who run their own businesses.
So on that front, the government said that modest tax increase only affects a small number. Do you think it's having a dampening effect on business and consumers?
I believe it is. I mean, when they said only 3,000 or 3,100 businesses, well, that's a lot of, and there were probably a bunch of manufacturers and holding companies that own manufacturing businesses. Always remember, I think the Canadians always remember that most manufacturers in Canada are small and medium-sized businesses. They're not Bombardier or Ford or General Electric. They are owner-operated, often family or a couple of people working together. And things like capital gains rules really matter, because these people have taken the capital risk, have started a business, and the only way they're going to be able to have either a pension or pass it on to their kids are vehicles like capital gains. And so that's why it's been probably more of a reaction than maybe the government thought.
All right, Dennis, great to have you with us. Appreciate your time today.
Take care.
Dennis Darby is President and CEO of the Canadian Manufacturers and Exporters. Coming up, Canada wants to attract foreign grocers to open up shop here. That's harder than it sounds. That's still ahead. But first, in a test of who should pay for fake news, a class action has been proposed for those who suffered when Tim Hortons accidentally told them they won a boat. There was no boat, or at least there was only one. The 499,000 other people who received an email telling them they won, roll up the rim and a boat, are upset. A law firm is suggesting they're owed that boat plus damages for suffering. Tim says it was human error. We say even if a judge kicks this suit to the curb, someone's bad day at work just got a whole lot worse. We're back after this.